Hi YouTube, my name is William Bishop, also known as WMBishop on eToro, and I'm here today on the 5th of January 2022 to give you my performance review for the past year 2021. So let's go onto my eToro page, onto the stats, and let's go down to 2021. I don't have a long history on there at the moment, so it's quite easy to find. 2021, and on the right hand side it will say I've had a return of 20.73%. Now that completely ignores the risk of my portfolio, which I will briefly show you. It is currently 4, risk score of 4, which is quite low. It's classed as medium risk. It's on the low end of the spectrum, 20.73%. Now, in a standard year for the S&P compared against its average, that would be a great return. But it's not a great return in 2021, because in 2021, the S&P 500, I'm referring to that one because it's a rather well-known index, the S&P 500 returned 28.16%, which is quite a difference from that 20.73%. So if you had a quick glance at my portfolio, if you had a quick glance at my stats page, you might think, wow, William underperformed by quite a way. I'm not interested in copying this guy. And that's okay, I understand that. But that information that you get there does not give you a complete picture of my performance. Now you might think, well, you would say that. Well, let's go to the chart. Now this is something that you can do at home on your computer or on your tablet or phone. Go onto the chart, go onto these arrows. Make sure you've selected last year to represent 2021. Now, I'm doing this on the 5th of January, so we have gone slightly into 2022, but this is what would have happened over the year if you copied me with $10,000. By the end of the year, up here, the figure is $12,979. That is a return of 29.79, which is in fact higher than the S&P, but what's important to realise, 29.79% reported there is quite different to the 20.73% you will see on my stats page. Let me go back to the webcam for a moment, because this is an important message. Everything I do for my copiers, I do with integrity. Every single thing. My copiers, I'm here for you. I'm always going to put your interests before my own. If you copied me, in perfect synchronicity, like I just said, you would have had 20.73%. But the chart is telling you a different story. The chart is telling you what I believe is a more representative performance of how I got on during 2022. Let me explain. I've talked about my journey on eToro before, but let's go right past here, past my average risk score, which was, okay, I'll briefly touch on it. You won't see January, but my average risk score for February was the same as January, average risk of 3, maximum risk of 3. It grew by April, average risk of 4. Same in May, went down and remained at 3 until it went back up November and December, and here we are in January, risk of 4. If we go down here, you will see I joined on the 17th of June 2020. I joined eToro to become a popular investor. That was the sole reason for me joining eToro. I'd been investing since September 2003. I've been doing this for family and friends, as well as myself. I wanted to do it for as many people as possible. Before I found out about eToro, I was investing, and if I found a company, I would phone up a family or friend and I would say, log into your account, buy this company. As long as they had money to do so, of course. I can't do that with these. I can't do that if I'm going to help as many people as possible. If we go up here, I've got 122 people. I can't phone up 122 people and say, buy this company, buy this company, buy this company. And that's why eToro is perfect. Because if you copy me, when I buy something, you'll automatically buy it. When I sell it, you'll automatically sell it. So I joined eToro to help as many people as I can. Now, I knew that to get on the program, you need an average of $1,000 in your account. I wasn't sure if I would be accepted onto the program. I believed I would, but I acted cautiously, and so I deposited at the time £1,000, which was $1,250.20 into my account, and I began investing. At this point, I realised the companies I invested in before, not all of them are on the eToro platform. Now, that's not me having a dig at eToro. eToro is a brilliant platform. They're adding new shares all the time. I believe there's more than 3,000 companies at the moment, and that is plenty to pick from. But not all of the ones I have experience of are on there. Companies on the AIM, the Junior London market, very small companies, are not available on eToro. So with my $1,250, I started investing in the companies that were there. Ashtead, Nike, Admiral, MasterCard, Visa, solid companies that I knew about. I've named those because I know about them, not because it's an investment recommendation. That left me with a cash balance. Now, if we go back to eToro for ease of explanation, and we look at 2020. 2020, when I joined, that was a year where we had the quickest bear market in history around February and March. That was because of the coronavirus pandemic, a lot of panic in the markets plunged, and then after that, the S&P went on an absolute tear. And yet I joined after. You could say my timing was lucky by joining in June. This is when the stock market was flying. Now, I've only returned 4.54%. I avoided the bear market in February and March. The S&P, despite that bear market, recorded 17.75%. And I've just got the best time to invest, and I only recorded 4.54%. So now you're looking at my portfolio, my stats page, and you're thinking, this guy's a joke. Why would I invest in this guy? This is why you invest in me. Let's go to my PowerPoint. On the 21st of July, 2020, I became a popular investor. I was accepted onto the program. I've been on eToro for a month and 4 days, and I'd joined a Facebook group populated by eToro investors. It's a brilliant Facebook group. I read the eToro newsfeed a lot, and I watched a lot of YouTube videos. And one thing I learned was that copiers do not like it if the popular investor they are copying makes a lot of deposits. So I don't want my copiers to be upset. I want them to be happy. Right now, let's go back to eToro. Right now, you can see I have 122 copiers. If I were to make a deposit, 122 people would get a notification. That notification would say, WMBishop has just deposited, for example, 40% into his account. If you want to keep synchronicity, deposit 40%. Okay? Now, I can understand why copiers aren't going to like that, because personally, I want my copiers to add money when it's right for them, not when it's right for me. This is not about me. When my copiers are ready to add to their copy, or when new people are ready to copy, and those people are ready to add, it's because it's right for them at the time. I don't want anyone getting a message and thinking, oh, I must copy now because William Bishop has copied. William Bishop has added to his account. It must be a great time. It's only a great time if it's the right time for you. So I became a cadet, popular investor, and my goal at that point right away was to become a champion popular investor, which I am currently. I had 4 copiers on the 21st of July 2020, and I thought, okay, I need to make a deposit. I need to take my portfolio. I don't have the exact figure, but my first deposit was 1,250. I need to get past the 5,000 mark, which is required for a champion investor. I have 4 copiers now. I'm not about to become a champion investor at any point soon because of my assets under management. We're nowhere near 50,000. But I want to, for want of a better word, I want to upset as fewer people as possible So I'm making my deposit straight away when I had 4 copiers. Now, like I said, at this point, 21st of July 2020, the S&P was absolutely flying. I could have picked up a newspaper, thrown some darts at it, and using those names, I could have quite easily padded out my portfolio, and I would have had a better result than the 4.5% that I ended up with. That would have been grossly unethical. I'm here to represent myself as a superb investor. I'm here to work for you, my copiers. I'm here to inspire my followers. I'm here to share knowledge. If I acted unethically, if I acted in my own best interests, I would have had a better return than that 4.54%. I would have just bought any old company because pretty much everything was flying. Now, that wouldn't have been right. Every company in my portfolio, you can guarantee, has been personally looked at by myself. I have over 18 years experience. I have a business finance degree. I have a master's in investments. I've completed the CFA program. I've got other professional qualifications. I know what I'm doing. Every company in that portfolio has been looked at by me. I knew that it would take a much longer time than throwing darts at a newspaper. I knew this would cost me in terms of my reported performance, but it's not about me. It's about my copiers and me acting ethically and with integrity for them. So, 21st of July, let's go back to it. I've got 8% in stocks, 92% in cash. This is like driving with a handbrake on. My performance on eToro, while I've got 92% cash, not that month because it was at the end of the month. Let's have a look at August, 1.46%. Now, my portfolio was I added to shares that month, but that 1.46% includes the balance on my portfolio that was in cash. The cash is earning 0. It's a drag on performance. It's stopping my performance looking great. Only the shares I'm invested in, which had gone from 8% to roughly 15% of the portfolio, those were the only ones driving that performance at the time. Cash is 0. If the S&P happened to go down, I would have looked great, but it wouldn't have been a fair representation, and I would have told you. The S&P went up. I'm being held back by the cash. So my goal was to thoroughly investigate companies. I find great companies. I find ones that have got a strong history. I find out why they've got a strong history. I understand the industries that I invest in. I learn about the management team. I see if that company offers a great investment opportunity, if I believe that company will be great in the future, and if it's at a fair price right now, I will invest. If the price is too high, I don't invest. If the company is not great, I'm not going to invest. Most of the companies I look at either go in the bin or go on a watch list until the price is more attractive. Very few companies make it into my portfolio from the ones I look at. My goal at this point is to get to the end of the year, and ideally I would have had 2% cash and 98% in shares. However, my analysis takes time, and at the end of the year, 54% in shares, 46% in cash. This was despite me being on furlough at the time, which I didn't realise at the time what a silver lining it was. It gave me every second of the day that I wanted, I could have spent on my portfolio, and I did. Now, I went into 2021 with 46% cash. If you look on my stats page, there is nowhere to tell you what my cash balance is. You could go into my portfolio history and try and piece it together yourself. But who has the time for that? This is the number you're going to look at. And now I'm filling out the bones I'm fleshing out the bones to give you as much information as I can to tell you why that 20.73% is different from the 29.79% you see on that chart. Now on the stats page, it will show you 20.73%. I've told you the S&P was 28.16, so I'm underperforming. There's a great feature on eToro. You can compare yourself over that time frame against any asset you want or against any person you want. Here, I'm going to compare myself against the S&P 500. You can do this. You can go on my profile, compare me against the S&P 500. I am the blue line. The S&P 500 is that green line. Here, where I'm mostly invested in cash and it's holding me back, you can see the S&P is ahead of me. As I've gone through the year, I've invested more cash and I've finished the year with a better return than the S&P 500. It's now showing you 30.8%. That's because this is live and the shares have changed on the 3rd, 4th and 5th of January where we are right now. The message is the same though. You see this line where my cursor is, that's the end of the year. The blue line is higher than the green line. WMBishop has outperformed the S&P 500. Now let's go back to the stats page. Let's go back to the webcam. Now you're at home and you're thinking, he's going to tell me that. He's going to tell me the best number because it's in his interest. I'm highlighting that because it is in my best interest to tell you, to make myself look good. It's in my best interest. There's no getting around that. It's important for you as a viewer, as a copier, as a follower to make an informed decision. I'm giving you as much information as I can because if you go on my stats page and you see those figures, you're going to avoid me. It's fair enough. I understand that. Based on that 20.73%, if my portfolio was fully invested for the year, I've underperformed. My portfolio wasn't fully invested for the year. Based on the 2020 figures, poor result against the S&P 500 for those 6 months. For 2021, poor result. That's taking into account the balance of cash though, and you don't see that. So here I am to tell you. Back on PowerPoint. I spent 2021 trying to reduce the cash balance on my account. You will see this if you scroll through. If you go onto eToro, you go onto my feed, past the pinned post I recommend reading, and if you go down, you will find eventually December update. I am on eToro a lot, so I do post. I am here to talk to everyone, so it takes longer to go down and find a post from a month ago because I am here for everyone. That's a December dividend post, that's a December earnings update. In every monthly update, to my knowledge, I have told people about the cash balance. My copiers who have been with me over the year, who have read the monthly updates, will know about my cash balance. If you don't know about my cash balance, this is a graph to show you how it has reduced over the year. It actually didn't reduce in every month. In June, I didn't make any investments because I didn't find any suitable ones. And so the dividends that we received actually took my cash balance up slightly. July, there was a bit of a peak in the cash balance around that time because one of the companies I was invested in, Alexion Pharmaceuticals, was acquired by AstraZeneca. We received the cash for that, so it went back into our available balance. My work continued, and by December, I got that cash balance down to 6%. Intuitively, the investments rose. This is purely because the cash balance has gone down. I've moved it into investments. I ended the year 94% invested compared, well, it's a completely different situation to starting the year. However, throughout that year, the cash balance was higher than what I wanted. My long-term target for my cash balance is 2%. So throughout the year, no matter how you look at it, the cash has dragged on my performance. The 20.73% that you see on eToro, on the stats page, does not tell you about the cash balance. The chart, in my opinion, does tell you a more informed picture. Not everyone gets that chart because by the time they've seen the stats, they think, let's get out of here, let's run for the hills. That's okay. I'm here to tell you you're missing something here. You're missing a solid investor. Over the course of the year, that's how I started on the left. December 2020, 54% shares, 46% cash. By the end of the year, I had 86% directly in shares, 6% in ETFs, both of which are stock market ETFs, and 6% cash. Still more cash than I would like, but clearly a lot less than what I had a year before. I'm going into 2022 more or less fully invested. So this discrepancy on my stats page has been removed. There's nowhere to hide. The number on my stats page for 2022 will be representative of what I do for you. The number on my stats page for 2021, if you invested at the start and all the way up to the end, that is the result you would have got if you were in perfect synchronicity. It doesn't tell you about the cash, but I'm telling you. The figure for 2022 will be more representative. I want to try and arrive at a calculation so I can tell you why the chart is telling you 29.7%, where the stats page is telling you 20.73%. So here's my methodology to calculate the underlying performance. That's what I'm referring it to, the underlying performance, not the reported, adjusted underlying performance of my portfolio. I have taken the monthly performance as reported on eToro. Let's go back to the stats page. Down here, these monthly performances, minus 2.23%, plus 0.62, plus 3.1, and so on. I am taking that number with the information I have about the cash balance at the start of the month, and at the end of the month, I'm dividing my monthly performance by the weighted average amount invested in equities. This strips out the effect of the cash drag on my performance, and it gives a result which more closely resembles a truer picture of my portfolio performance. However, please note, by taking a weighted average rather than using the exact timings of my investments, we end up with a crude representation of performance rather than an exact figure. So the numbers I'm about to show you, they're not the 29.7% on my chart. They're close, but not that exact figure. That's because I'm not using exact dates, I'm using averages. Now, this is the reported versus what I'm calling my underlying performance. On the top line, reported performance, those are the exact same numbers you will see on my stats page on eToro, minus 2.23%, plus 0.62, and so on. Underlying performance is calculated using the methodology I just told you, that performance divided by the weighted average for the month in investments. As you can see, for every month, every red month on the underlying performance is more negative than the reported performance. That's because I've stripped out that zero return from the cash. This is just the shares now. Bigger negatives, and every single month where it's positive, they're bigger positives. You can go right over to the end, and I've arrived at a figure of 26.91 compared to the 20.73 that you see on my stats page. Now, again, it's lower than what I'm telling you in the chart. It is lower than the 28.16% on eToro, but it is more representative than what you see on my stats page. It is more representative than what you see on my stats page because I have stripped out the effect of the cash. When I go into 2022, well, we're here now, it's the 5th of January, I have a very small cash balance to what I had at the start of 2021. This underlying performance without the shares is, let me get my words correct because I don't want to mislead you. The underlying performance is without that cash balance. In 2022, I am quite without a cash balance, and the reported and underlying for 2022, it won't be those numbers because no one can predict the future like that, but the reported and underlying will be quite similar. I'll talk about geographical diversification in a moment. Let's go back to my eToro and the portfolio. Because performance benchmark is important, let's have a look at my portfolio. I've adjusted it in terms of the most invested down to the least invested. Here we have Domino's Pizza, American company, Admiral from London, Monster, US, Copart, US, Visa, US, Euronext listed on the Paris Exchange. Let's skip past some others because most of them are America. Kindred, Swedish Exchange. IEMG is a emerging market ETF, and just above Apple, Ashtead, listed on the London stock market. This is the geographical diversification of my portfolio. 72% of it is invested in America, 9% in the UK, 5% in France, 5% in Sweden, 3% emerging markets, 6% cash. Now, throughout this presentation, I've talked about my portfolio compared to the S&P 500. Well, the S&P 500, it's a US stock market index. It represents the biggest 500 companies in America. I am of the belief, as are many other people, that the best investment opportunities in the world do not all lie in one country. You could go on many profiles on eToro and you will see people have invested in the UK, the US, France, Germany, China, all over. I am investing, when I look, I'm looking for companies from any part of the world. The S&P does not do that. So if my performance from the UK was brilliant, or from France, Sweden, or the emerging markets was brilliant, compared to the performance of the US for that year, it would be quite easy for me to outperform the US, outperform the S&P 500, but that would not be fair to benchmark my performance against that, because the S&P 500 can't invest in anything outside of the US, can't even invest in anything outside the S&P 500. This ETF, SWDA.L, represents the MSCI World Index. It's available on eToro, and it represents investments from all over the world. As you can see, the majority of the investments in the MSCI World Index are in the US, but they invest in Japan, UK, Canada, France, Switzerland, Germany, Australia, Netherlands, Sweden, many other countries around the world. I am not trying to match that performance, I'm trying to outdo the performance of the MSCI World Index as well. That's why my weightings do not match the weightings of the MSCI World Index. However, that index is more representative of my performance, or rather, that is a more representative benchmark for me to judge my performance against, rather than the S&P 500. If you don't understand this concept, think how you would feel if I judged the performance of my stock market holdings against the performance of a bank account. Quite rightly, you'd laugh at me. It's not a fair comparison. If I compared shares, the performance of the stock market against the performance of a bond market, you'd laugh at me. It's not a fair comparison. So if I compare my portfolio from all over the world against a portfolio solely from America, it's not a fair comparison. If I compare my portfolio against, if I compared a portfolio where I could invest across any asset in the world, and if I were to invest in crypto, I don't. I will show you on my stats page. Let's go down. 95% stocks, 5% ETFs. Those are the stock market ETFs. Never invested in crypto. Not against it, it's just not for me. But if I were to invest in stocks and crypto, then why would I pick the US S&P 500 to benchmark my performance against? They can't invest in anywhere else in the world. The index can't invest in crypto. It wouldn't be fair. It's not a fair comparison. This is the best benchmark to compare my performance against. Now, this is the past 5 years S&P 500 against the MSCI World Index. You will see in 2017, the MSCI World Index outperformed the S&P 500. However, 2018, 19, 20, 21, the S&P 500 had a much superior performance compared to the MSCI World Index. Over those 5 years, when you multiply them together in a time series, you get a cumulative return of 127.05% for the S&P 500 compared to a return of 101.42% for the MSCI World Index. So, I'm telling you, I want to change my benchmark. The MSCI World Index represents me better. I know some people are going to scoff and say, well, you're just picking a smaller hurdle. You're just picking the MSCI World Index instead of the S&P 500. No, I want to beat both of those indexes. I'm telling you, S&P 500 doesn't represent my portfolio. The MSCI World Index is a better benchmark. I want to beat both. I believe I can beat both. I have beat both in the past. So if you want to troll me, troll me. If you want to understand with an open mind, do that. I'm ready to answer questions for both of you. If you are asking, am I cherry picking an easier benchmark? No, I'm choosing a benchmark that is representative of the universe of investments that I invest in. The MSCI World Index may perform the S&P 500 in the future. It might outperform it, pardon me. We don't know. We don't have a crystal ball. 2017, did we know the MSCI was going to outperform S&P 500? Perhaps not. Perhaps we did. Some years it will outperform, sometimes it won't. It's not necessarily an easier benchmark. I intend to outperform both indices, and from now on, I will report both against my performance. I will report both indices. I don't want you to think that I'm hiding my performance. I don't want you to think anything bad of me. I am transparent as possible. So I'm not hiding the S&P 500 performance. In every monthly report from now on, in every annual report, you will see my performance against the S&P 500 and against the MSCI World Index. I think you should focus more on the MSCI World Index when judging my portfolio because it's more representative. But if you want to judge it on the S&P 500, I've put the numbers there for you to do so. Now, what's important to remember when you are judging performance is no matter what performance figure you look at, the ones I've given you, the one on the chart, the one on the stats page, 1 year is not a sufficient amount of time to evaluate my performance or anyone's performance. A sufficient amount of time to evaluate performance is over periods of 3 or ideally 5 years. You do not have 3 or 5 years of verified data on my performance just yet. You have half of 2020, the whole of 2021, which I've explained doesn't represent my portfolio, and now we have 2 days represented for that minus 0.48% for 2022. If you are sceptical about me, put me on the sidelines, put me in your watch list, look at my performance for 2022, 2023, 2024, 2025, 2026, 5 years. Make up your mind on New Year's Eve 2026 or New Year's Day 2027, come back to my portfolio, have a look. If I've underperformed over the S&P 500 or the MSCI World Index, I will hold my hands up and you can say I was right to stay away. If I've outperformed them over those 5 years, then all that's to say is, okay, well done. I doubted you. You did do it. I'm not sure if you're going to do it in the future. I'm now going to decide if I want to copy you. So that's great. If you want to wait on the sidelines and watch, do so. But my portfolio, it's got a cash balance of 6.33%. It's 97.66% invested in shares, invested in companies that I believe will be great. You will see my true performance over the next however many years. I'm going to be on eToro for a long, long time, believe me. Wait on the sidelines if you want. Be as skeptical as you want about me. Ask as many questions as you want about me. Go on the comments on YouTube. Ask questions. Go on my eToro profile. Ask questions there. I will answer everyone. If you're not ready to copy me, don't copy me. Simple as that. It's your money. Do what you think is best for you, but do so with an informed decision. If you believe what I've told you, great. If you're ready to copy, copy. I will do my best for you every single day. If you're not ready, wait on the sidelines. Come back to me in 3 years or 5 years. Assess my performance then. I hope you've enjoyed my annual performance review. It might not have been the subject matter you were expecting, where I question some figures. I accept the figures presented, but I give you a bit more clarity about them. And I also announce a different benchmark for myself. If you've enjoyed the video, please comment, tick like, subscribe to me on YouTube, that would be fantastic. If you're interested in my eToro portfolio, go to etoro.com/people/WMBishop. Either add me to a watch list or, if you want to, copy. Thank you for your time. Have a great 2022.